Brexit, Trump and the Italian referendum. 2016 has been quite a year. Well, with a dot plot in place, political uncertainty in Europe and Article 50, 2017 is set to be just as thrilling. Peter Dixon from Commerce Bank joins me now for what to expect for 2017. It's even weird saying that, isn't it, 2017? But before we crack on with next year, let's just quickly evaluate 2016. What's shaped it for you?
Well, I think you named them. I mean, it was Brexit first, Trump, but let's not forget that we started the year in fairly wobbly mode with the Chinese equity market correction. So it didn't start off well, and it kind of got worse. And we've ended the year with a whole bunch of, as you said, political issues which have been piling up and which are going to spill over into 2017. And we're going to have to think very carefully, I think, about how to tread around that.
So do you think political uncertainty then in 2017 is going to be the major theme? Because obviously you've got France, Italy, this discontent vote that, if you like, saw Trump to victory. And we can see that boiling over here in Europe, can't we?
No, I think that's absolutely right. I mean, I think the French election, we've got the Dutch elections too, of course, and the German elections later in the year. They're all going to be very important because they will give us some indication of the extent to which electorates in these three important countries view the EU. And of course, with ongoing concerns about Greek debt restructuring still out there, I think we're going to be talking a lot about political uncertainty this year, or next year even, and what it means for EMU, because I think increasingly a lot of economists are beginning to question what is the future for monetary union unless we see some progress on debt restructuring. Okay,
and other themes that you mentioned, China, do you think that's going to be a big deal in terms of debt next year too?
Well, I mean, I think increasingly it's on the radar screen. We are seeing indications that the Chinese levels of debt are at extremely high levels. Now, I've always taken the view that the Chinese authorities will provide the means necessary to ensure that the economy doesn't collapse. But I think there comes a point where you have to say, well, you know, maybe things are getting pretty serious. We're already seeing indications, for example, that the Chinese authorities are not, or in fact, they're taking back the liberalisation of the capital account that they started a few years ago. So I think that's an indication that the Chinese are concerned about capital flight. And once you start to get into those kind of situations, well, we all start to take out our history books and ask ourselves what happened in 1998 in Asia. And of course, we saw that huge excessive debt levels then caused major problems. So it's certainly going to be a cause for concern.
Okay. Article 50, we have to talk about that one. So, well, presumably it's going to happen. Brexit means Brexit, so we've been told. What will this mean? Do you think we are going to have an exodus of all the bankings, the financials leaving London?
Well, I think the first question is, will we get Article 50? I think that the smart money would have to say yes. Will it be March? At this stage, I wouldn't be that sure, because obviously we have to get through the Supreme Court ruling, which may change the deadline somewhat. And if we do get it, in my view, it makes a lot more sense to have it after the French and German elections, which would mean sometime later in the year rather than earlier. But you know, that's by the by. But I do think that we are seeing indications that banks are beginning to get somewhat concerned about what the UK's relationships with the EU will actually mean, because obviously if we don't get a passporting deal, it's going to put London-based banks at a significant disadvantage. So it makes a lot of sense to have some kind of productive capacity outside of the UK.
Global economics, one huge economy that's really in the doldrums, and it has been for, what, 3 decades, if you like. Japan. What can we expect from Japan in 2017? Much of the same, kicking the can down the road situation?
Yeah. More of the same. I mean, it's an economy which is growing, not particularly rapidly, but I think that's primarily for demographic reasons. Obviously, the population there is contracting. But the BOJ has been spectacularly unsuccessful, as we thought it would be, in getting inflation back to 2%. It will be unsuccessful again in 2017, but that won't stop it from trying, so we'll see a lot more asset purchases from the Bank of Japan, thereby helping to swell the bubble in Japanese asset valuations. But yeah, it does look at a fairly sort of grim picture from a macroeconomic perspective, and I don't see any turnaround there anytime soon.
That's quite a depressing thought, isn't it, really? Emerging markets, where do you think the real weak spots are?
Well, I think we're starting to see weak spots emerge everywhere. I mean, we talked about China, but because obviously China is the glue, if you like, which holds a lot of these things together. Things like Turkey are clearly markets where I think investors are increasingly concerned about the institutional arrangements which underpin markets there. So I think that's certainly one weak spot. We've seen Brazil go through significant turmoil over the course of the past few years. We're not seeing an awful lot of indications that the Brazilian economy is going to be an awful lot stronger in 2017. And of course, there's a question of Russia. Geopolitically and economically, it's a problem, particularly for the Europeans. And I think that's going to be very high upon investors' radar screens as we look towards 2017 as well.
Mm-hmm. But surely, if you're going to talk about Russia, actually relations are warming up because Trump and Putin seem to be rather friendly.
Well, maybe. I think it remains to be seen exactly how that's going to pan out. I mean, I think at the moment we have a situation where Mr. Trump and Mr. Putin say nice things to each other in public. But I think the real test is going to come when Russia perhaps tries to test American resolve in areas where it's traditionally held sway. That might start to change things a bit. I rather suspect that relationships at the end of 2017 may not be quite as warm as they appear today.
Interesting. And Peter, just to conclude, am I missing anything here? What's on your radar?
You almost certainly are, but the trouble is we're all missing it, because I think what we've learned over the course of recent years is that things tend to jump out from nowhere and scare us. I mean, I think geopolitics does scare me. It always has done. It always rises up the radar screen. A more belligerent China, a slightly more defensive Russia. These kind of things do have the potential to get out of hand. But I mean, it's a low-risk event, obviously, but it could turn into something more dramatic. The one other thing which I continue to highlight, and I give it a bigger weight every year, is some kind of cyber problem. I mean, cyber crime, cyber security is increasingly rising up the agenda. It's something which keeps governments awake at night. If you're looking for something out of the blue to change the perceptions of how markets operate, that might well be it.
Interesting. Thank you very much indeed. That's Peter Dixon there from Commerce Bank telling us all about 2017. It seems to be we should all be worried about cyber.